So guys, what is an order block? It's a change in a state of price delivery. Yeah, so before I go ahead and explain what an order block is and how it's useful, well, first I would like to acknowledge that most of my understanding of the smart money concepts came from actually by looking at the videos and learning from the ICT, yeah, Michael. And yeah, I'm very glad to be his student, so please do check him out. He's a great guy and someone that deserves to be learned from actually. So yeah, let's get back to topic. As I said, our understanding of market based on a core concept, and what that is, the market is 100%, 110% manipulated. Yeah, that's what we believe, that it's a completely controlled market by big banks, institutions, or more importantly, like smart money concept. We want to say that by a composite man. Let's take an example, like yeah, if you have a business, or you're selling some kind of products or services, so who's going to set the price for that? Is it you or the consumer? Of course it's going to be you, because that's your product. Yeah, so same goes here when we trade currencies and commodities. So who own this currency? Of course the state bank of that particular country. So who is going to set the price? It's of course the state bank. So either they take the price to complete new highs, or they take the price to completely new lows. So that's because of their own benefits. Liquidity being created in a market on both sides. So as you all know, what's resting above is buy side liquidity, and what's resting below is sell side liquidity. And yeah, so above and below is the stop loss that resting actually, which is actually a liquidity. And then you see a price move like a heavily towards a downside and taking off the liquidity or order that resting below these swing lows here, and then kind of move towards upside and maybe a little bit retracement, and then keep going higher. So what we actually see here is price went higher, and when we actually see this massive move up, like a massive shift in a price, we tend to believe that there's a big involvement, like this move higher can't be done by retail trader or the small traders like us and like uninformed traders. This has to be by you can say a composite man, or by from banks or institution or hedge funds. Yep. And then from the like a term of smart money, from the smart money concept, we want to see price coming down to the order block here, or maybe a deeper retracement before it continue going higher. Yep. So but when that move happens, in reality is, let me tell you how it happens. So when you see that they reach the, or they hit the position where they want to sell it from, and the composite man or the banks want to sell from. Okay, when they start selling, they will sell and then buy, sell and then buy a little bit, because they will keep creating these swing lows. What are these actually? The orders. So because when you see this a little bit shift towards upside, what retail traders and what uninformed traders will see this as a kind of trend lines, and they tend to believe that it will keep going higher, but they will take the price a bit higher, and then they will move it lower, and then keep liquidating the positions, or the buyers, those who are starting buying, and tend to believe that it will keep going higher. And what actually they want to do, they want to bring the price to the level where actually they will take off all the orders, and they want to make sure when they sell it, and then buy it heavily and move the price to the top side, they just want to make sure they are not in the negative position. So they will, or actually they are mitigating from their positions here, and when they mitigate all of their positions, they will take the price to the upside. went out of this range, this consolidation, as I mentioned before, that what's resting below is actually stop losses, which is a sell side liquidity. So they target this is sell side liquidity, and on the same time they hit that bullish order block and take the price towards top side, towards high. And when they start breaking down the prices, they hit that bullish order block, and then it went continue going higher. So there's another important thing I would like all of you to have a look. This is something I just learned from ICT, from his 2022 mentorship. So if I take my Fibonacci from this swing low to that swing high, that's actually a range. So if why I'm using this fib is actually just to show you guys the 50% of this whole range. From here to here is the 50%, and from here to here is the 50% of that complete 100%. Yeah. So that 50% is actually a premium market, the one on top, and this is a discount market, because if you wanted to buy it, you will wanted to buy it from discount, not from premium. So that means if you wanted to take the price to higher, I mean not you but banks or institutions, they will not take it from this premium market. They will bring down the price to the discount market, either 50 or 62%. Yeah, and then take the price to the top side, as you can see here. It's about the order blocks and mix of some other stuff like fair value gap and liquidity. So best of luck to you guys until I see you next time. So yeah, take care guys.